What's up, guys? Jordan from Pre-Condo here. Today I wanted to talk about the current state of the real estate market in the GTA, specifically the resale market as well as the rental market. So we're seeing some interesting things. We're seeing price retracement. We're seeing a little bit of price declines in specific areas and specific asset classes around the GTA. And we're seeing rental prices increase rather rapidly. So the first thing I want to show you is sales volume by location. You can kind of see here as we exit February, sales volume just plummets, and this is for all regions: Durham, Halton, Peel, Toronto, and York. And you can see sales volume across all property types just sort of plummet. Now, if we hop over to sales price trends by region, and we drill down to the weekly numbers, you'll see that excluding, we're on an average price calculation. We could go to median. You can see here that prices across the board are plateauing or falling in many instances. You can see here Peel in particular doing quite poorly, as is Durham region. Now let's look into some specific numbers and comps. So this is a report that House Sigma just put out. GTA home prices cooling from record highs in February. So February was absolutely the peak of the market, pretty much across the board. So it was so frothy, in my opinion, that February almost as a data point should kind of just be ruled out. So if you're a seller, you're looking to sell your home, especially if you're really any freehold property in an exurb market like Hamilton, Oshawa, those sorts of areas, you shouldn't be looking at February as your comparable for what you think you're going to sell for. February prices have come and gone rather rapidly. So we look here for detached homes down 12.1%, February versus April. Semi-detached down 13.5%, freehold townhome down 22.6%, and condos holding up the best at 6.8%, which is, in my opinion, because condos didn't see as rapid price acceleration through COVID. So they're the least frothy of the asset class, or at least that's the way I look at it. And as such, they're a little bit protected from any sort of price retracements here. Also worth noting, as interest rates go up, people's buying power decreases, and as a result, condos become, as they're the first rung on the property ladder, they become more affordable, and they become the asset class that when people have less money or less buying power, they tend to pivot towards. Now, I think it is important to provide a little bit of context to these numbers here, right? Because February, like I said, was the absolute peak of the market and incredibly frothy. February and January of this year were considerably higher than December of last year, for example. So I think it's important to take these numbers with the context of the price growth we've seen in the last 2 years. This shouldn't really shock anyone. A lot of us have been calling for a little bit of a correction for some time now. So if we look at the average price change for detached homes in February of 2020 to February of 2022, or for our intents and purposes, we will call it the COVID market. So let's look at some numbers here. We've got Brampton detached up 66%. You've got Mississauga at 55%. You have King City at 141%, the clear winner on this chart. Now, again, worth noting, King City, not a big sample of property sales, maybe 30, 40, 50 in a given month. So the averages are pulled pretty heavily if you have a particular month with a lot of home sales. So I wouldn't take this as, your average home in King went up 140% over the last 2 years. It's probably more likely lower than that. It was just, February of 2022 had a lot of large sales type of thing. But regardless, you're north of that 80% number. Markham at 53%, Newmarket 70%, Oakville 55%, Milton 77%, and of course Oshawa at 94% price growth over a 2-year period. So again, it's important to take those numbers in context when you're seeing detached home prices slide 10-15% February versus April. It's important to remember that doesn't even really bring us back to December of last year prices. It's a very modest correction so far. Here you have one in Markham. Now, this one was making the rounds on Twitter today, and they aren't actually apples to apples comparisons. Now, they may look like it. They're both 3-bedroom townhomes, and they're literally next door to each other. It's easy to look at this and say, wow, February versus 3 days ago, you're looking at a $450,000 price difference. Well, the reality is that the one that sold for less is on a 19-foot lot, and the one that sold for more in February is on a 25-foot lot. And the one that sold for more in February is almost 30% larger, so it's about 500 square feet bigger. So you are seeing price retracement on this. You're seeing a correction on this, but it's not 40%. It is more like a 15% price correction on this at most, which is in line with what we're seeing across the broader market. Here's another example of a townhome in Hamilton that sold for $960,000 just recently versus selling for $1.033 million in January of this year. And as far as condos, they're holding up pretty well. So we just saw this sale the other day at 1000 Bay, which is Bay and St. Joseph. This unit, this 2-bedroom, 2-bath with 1 parking, 761 square feet. It sold for asking price for $1.3 million. That's in line with comps from February. So February 2-bedroom comps and January 2-bedroom comps, you're going to see 16 to 1800 a foot. Like I said, condos are holding up the best right now, but inventory is building. But on the flip side of that, rental rates are rising as well. So thanks to our friend Zealand on Twitter, we've got this data here. Blue line is all of the active residential resale house listings across the GTA, including condos, freehold, all that good stuff, right? You can see we have now surpassed our seasonal norm, right? Not our seasonal norm. If you look over 10 years, we're getting there, but versus last year this time, which was record low inventory, we're exceeding those levels, right? On the flip side, as I showed you previously, sales volume is dropping off. Now, what's more interesting to me is rental inventory is falling rather quickly. Here's a quick zoom in on Toronto condo resale listings. So condo inventory is building as well, but not building as quickly as freehold inventory currently. So here's why rental prices are rising, simply supply. So a lot of the rental market's humming along really well right now. This is the vacancy rate for purpose-built apartment buildings in the GTA over COVID. And you'll see now we're back down to historical lows at 1.8%. Through the worst of COVID, we were up north of 6% vacancy. Now, this is purpose-built rental, but this does carry over to the condo market. And here are those rental rates I was talking about. So the big winner here for rent price this year versus same time last year, Vancouver up 30%, almost 30%, right? Hamilton is up 16%, and Toronto rents are up 14.3% in a 1-year time period. So we are very rapidly getting back to all-time high rental rates. And if this inventory continues to absorb the way it has been, then rental prices are going to continue to go up. And that makes sense in a rising rate environment. Capital cost is increased. Generally speaking, you tend to see rents go up as well. And this is no different. If you like this type of content, guys, like and subscribe. And if you have any questions, concerns, leave them in the comments. And I will see you guys next video.